Hello and welcome to another edition of the Moving Iron Podcast. This podcast is proudly provided by Axon, helping dealers move more iron for almost 100 years. Find out more at axontire.com. Axon was started almost 100 years ago out of a passion for keeping agriculture moving. It's that same passion that drives them today. With a vision for a better experience for both farmer and dealer, they set out to create a better way to move more iron. When you partner with Axon, you get immediate access to a full range of products and solutions designed to meet the complex needs of today's grower. Axon carries all major brands and sizes of tires, wheels, and tracks. From custom colors and sizes to fully customized wheels, you can have the solution for virtually any problem today's farmer is trying to solve. To find more or become an Axon dealer, please visit axontire.com. This podcast is also brought to you by Valley Transportation. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. This podcast is also brought to you by Ag Direct. No matter how you buy your ag equipment, from a dealer, auction, or a private party, Ag Direct can help you finance it. You can even apply online at agdirect.com. Learn more about your financing options at agdirect.com.
Moving higher in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving higher.
Hello and welcome to Moving Iron Podcast Markets with Chip Nellinger. This edition of the Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com. Also, Valley Transport has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 or go to valleytransinc.com for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. And last, no matter how you buy ag equipment, from a dealer, auction, or a private party, Ag Direct can help you finance. You can even apply online at agdirect.com. Learn more about your finance options at agdirect.com. Chip is with Blue Reef Agri-Marketing out of Morton, Illinois, and he's nice enough to come on once a week and talk about what's going on in the markets. Chip, how you been, man?
Hey, doing well. The long-awaited January crop report is coming out in a couple hours here, so
yep.
Obviously that's going to be a potential big market mover. Tons of information there.
Yep.
And almost a little bit, kind of overshadowing that to some regard is this weather situation in South America. Yep. So that's also front and center. So a lot of stuff to chew on for the markets here today.
Absolutely. Okay, so let's talk about the market report coming out here today. This has been the long-awaited January crop report, and we've talked about it since July. We've been talking about in January. We'll know more in January. You look at expectations in South America, and about every expert, every government agency, everything, they've been continually rolling those back. Expectations back when either corn or soybeans, either one. Looking at what's going on there. I guess you take a look at the WASDE report or the stocks report when it comes out, and then just kind of overall, do you feel like the USDA is going to come to the table and say, you know what, we're gonna drop the overall bushel count down, 2 or 3 bushels, and considering what's going on in Brazil, make a big slash to the overall stock report?
I don't. I think in my mind, and talking to producers kind of in the upper Midwest, call it the I-80 corridor, there's probably some evidence that they could maybe lower corn yields a little bit. I think they're probably pretty close on bean yields, but that could open the door up for a shock, either way. So that's the beauty, I guess, or the ugliness of this January crop report is it's the last, unless they do something a year from now on a stocks report or something, we're going to get the final, yield numbers as well as any potential acreage tweaks. That's always a wild card. They can kind of shore up some of the acreage discrepancies that they've seen through the year, and demand also. So, to your point, my brain tells me that on beans they're close, just in the way they did it, right? They raised, and then they dropped it slightly on that last report. That tells me that they're probably pretty close on the beans. Corn, however, I think is, due to some the down corn issue, the dryness of the last part of harvest. There's a lot of corn coming out of the fields, 13, 14, 15% moisture. A lot of talk of this phantom yield loss. I'm a believer of that. When you're harvesting 13% corn versus 22% corn, you are leaving yield in the field. More down corn than normal. We had a lot of tar spot issues as well that took some top end yield off, and that expanded actually from a year ago, and seems to be at least in Illinois moving from north to south and expanding that area, even pushing now into parts of Indiana as well. And so I think that the door's open for a yield cut in corn. I think that would shock some people. I think if you look at the ethanol numbers, there's a strong, evidence that they're a little bit too low on their ethanol numbers based on, the past few months here as far as the ethanol grind goes. Still very strong profitability on the ethanol side. So, that could set the stage up for something that's pretty friendly if they did cut corn yields and raise ethanol demand, even if it was 50 million bushels. That's just my gut, and I am not a very good predictor historically of what the USDA is going to do. So I'll put that out for fair warning for everyone. In the same breath, if they come out and they raise corn a bushel and a half, it's going to throw a little bit of cold water in the face of the bulls here. Not to mention all the world numbers that are going to be out. We've got a quarterly stocks report. We've got wheat acreage. There's a lot of information to chew on this January crop report.
Yep. All right. Excuse me. Over the last couple of weeks, the markets have just been getting hammered. I mean, everything has just been down. Even the volatility is kind of wavered towards the downside of the volatility. So a lot of stuff going on in the world right now. When you look around, Russia and this whole Ukraine thing and Kazakhstan, and you've got drought situations all over, just geopolitical and weather stuff kind of all smashing together. As you take a look at the marketplace and you see the different variables that are going around out there, what are some of your thoughts on just the last 2 or 3 weeks and this volatility that we've seen, especially towards the downside?
Yeah, I used to have on my computer monitor a little yellow sticky note, and it KISS, keep it simple, stupid. I'm a big believer in that. So I think, to your point about the downside and markets push a little bit lower here on the grain side, I think that's just in response to this report coming out today, and also a little bit better chances of rain a week out for some of the dry areas in Brazil and Argentina. So that caused some profit taking going into this report. But I think two very important things that I've been keeping an eye on here. Number one, crude oil. It's pushing into new contract highs today. It is almost exactly $20 a barrel off of the December lows. So we've rallied crude oil $20 a barrel in essentially a month, 4 weeks, 4.5 weeks time frame. To me, that is the easiest bellwether for do we have inflation or do we not? Crude oil, the energy markets are going to lead us higher and drag everything along with it. And the higher crude oil goes, the more I feel inflation money flows into commodities. The other thing, the dollar index, which is a little bit counterintuitive in itself. That's why I'm a big believer in watching the market, just watching the chart and not trying to predict it. With interest rates going up, you would think that would be supportive to the dollar. The dollar is now at 60-ish day lows, so, and kind of breaking out to the downside. So if crude oil continues higher, the dollar continues lower, I think there's going to be a lot of buying interest on these breaks that you see, like we've seen here the last week or so in the grain markets. So it doesn't mean you can't go lower. I just think that with the drought situation in Brazil and Argentina, you've likely raised the bottom end up a little bit. As you've shrunk that supply, you've likely raised the top end up as well over the next 90 days. And if you throw a little fuel on there with the dollar continuing to break and crude oil maybe pushing up into the $90 to $100 range, the path of least resistance is higher for the grains. So we'll see how this report affects that here this morning.
Okay, let's focus on wheat just for a minute here. The wheat price has dropped about $1 here over the last couple of weeks, and I'm kind of get your opinion on this. There's nothing out there right now that shows that wheat has any real favor of showing any kind of a big crop. France is talking about cutting its wheat export forecast. Right, so they're not going to export as much wheat. We've got the situation in Kansas and Oklahoma with the windstorm that came through and how the damage that did to a lot of wheat there. You start taking a look at what's going on in Russia and the amount of wheat that's going to come out of there, plus the geopolitical stuff that I talked about earlier there in Kazakhstan as well as Russia and Ukraine, those kind of things. Don't have a lot of wheat and wheat stocks as it is right now. What are some of those driving factors that you see in wheat right now that's been pushed it down so far?
Yeah, again, like we talked about the dollar, right? Mm-hmm. Fundamentally, you would think the dollar is going to be strengthening, and nothing's changed fundamentally for wheat. You'd think it would be supported. I think the biggest thing that's happened in wheat is money flow and the funds. The funds oftentimes like to have spread positions, a kind of hedge, so to speak. So as this drought has intensified in the southern hemisphere, they've been buying corn, they've been buying beans, and as an offsetting spread, they've been selling wheat. Not from a fundamental standpoint, just to have something against them to protect themselves just a little bit if something happens geopolitically or black swan type thing, stock market, economy related, and everything goes lower. Wheat's likely going to be the one that leads the way, helps them offset maybe some of their losses. Also, it's a leverage thing because spread margins for spreads is less than outright, long short positions, and so these funds can get more leverage and a bigger position built up if they spread something. Well, the kind of redheaded stepchild, so to speak, of the grain complex here is the wheat market. Historically, that's been the case, and in spite of friendly fundamentals, even here in the overnight, the wheat's, lower, just getting ready to open here, the wheat's leading us lower. And so I think that's really been a function of the funds and money flow. It has nothing to do with fundamentals. But yet it's a head scratcher, right? I mean, you look at all the things you said, European wheat prices, the Russian export tax continues to go up. I think it's $100 a ton now. Started out like in 35 or something. They just raise it about every other week. Nothing's changed. Still dry weather in the plains. So if you're sitting here buying wheat thinking it's got to go higher because of fundamentals, you're certainly scratching your head right now. I do think you're probably closer to support. It's not going to go down forever. And if nothing changes, particularly in Kansas and Oklahoma, continues dry, we kind of get later this winter, early spring, come out of dormancy, get a better feel for what that windstorm and the dry weather has done to that crop, that wheat has plenty of upside, especially now with the funds short, net short wheat. But I think a lot of it is explained away with spread activity, and that, again, like the dollar, sometimes these markets kind of do things in spite of what the glaring fundamentals are. But it's also hindsight too, right? Because we did rally a couple dollars in wheat based on those bullish fundamentals. So the market's a futures market. It's maybe digested a lot of that bullish news for the time being, but certainly been a head scratcher the way the market action has been.
Right. All right. Let's talk about the cattle complex here for a little bit, cattle and hogs here for a little bit. Cattle prices, if you look at like box beef price and stuff like that, they've been getting kind of beat up here a little bit. And but the cattle price in general has, kind of bounced back and forth. The live cattle kind of bounced back and forth. So I guess you take a look at that cattle market there, and then, all this pressure you're hearing from, the government's going to start its own feedlot and it's going to start doing its own butchering and everything else to help manage some of this competition and those kind of things that are out there. I guess as you look at these things, what are your thoughts there moving into the first year like this?
Yeah, there's been a lot of talk about a lot of things. Not to be too cynical, but when the government wants to get involved, I'd urge anyone to email me or call me with something they've made better when they get in the middle of something.
Exactly right.
But that's a separate story. I think that first of the year, for whatever reason, cattle prices and even hog prices have slid a little bit here. But I don't think they're immune to this inflation thing. I think if the dollar keeps breaking and the energy markets keep going higher, crude oil specifically, that the path of least resistance, is to the upside for cattle. Box beef have made a nice turn here the last 2 or 3 days and have rallied quite a bit. So the packer margins are still there. One thing we're fighting a little bit that, is probably likely cause of some of the selling is this whole COVID, burst that we're seeing. And I think the plants, not just the plant, I mean, everywhere,
Right.
no industry is immune to it.
Right.
People are getting sick and they're having trouble with the speed of the kills, right? Our kills have been pretty slow. That tends to back things up a little bit. Probably part of the reason box beef has rallied a little bit. And so, I think that'll fix itself. I don't expect that to get like it was a couple of years ago. I like the livestock sector into the first quarter. Probably cattle more than hogs. Summer month hogs were, at $100 here recently. So you're factoring a lot of bullishness on the pork side of the equation. To me, I would think cattle have some upside here if we can kind of get past this COVID issue, get these plants running, back to normal speed. I think the numbers will start shrinking a little bit as we go forward and be supportive to cattle.
Yeah. Yep. Okay, so hogs, jump over there and talk about them a little bit. I mean, the Chinese they're in one day and out the next, in one day and out the next, and it's really fluctuating with the hog market we see happening there. They've been beat up a little bit, but they've had some rallies here and there as well. But it's all based on Chinese buying, it seems like. So I guess as you look at the hog market, what are your thoughts there?
Yeah, I mean, that's always going to be there. On the one hand, China for months have been saying we've got, the hog herd back to, pre-ASF levels, but they've been still a decent buyer of pork. Now, very recently here, they've kind of slowed that down. Maybe that's holidays or maybe that's an indication that they are back to normal a little bit. But the hog market, I think, is in pretty good footing. In spite of high prices, due to the construction costs and all the other supply chain issues and the cost of expansion, we didn't see a lot of expansion as you would expect high prices would normally have brought in based on that last Hogs and Pigs report a couple weeks ago. And so I think we're in pretty good footing here. But again, if you're sitting out here a hog producer, you're looking at, near $100 summer hog futures. And I know meal has shot up a little bit. I know we're sitting here at $6 corn futures. So feed costs are up some, but still profitable out there. I think you got to keep your eyes, on the ball and manage risk. We can be bullish all you want, and I am, in commodities in general into the first quarter. But from a producer standpoint, whether that's row crops or livestock, you still have to recognize risk, know where your costs are. If you're in a strongly profitable position, there's ways to lock that in and still maintain some upside, price potential. And so I think we have to keep that at the front of our minds from a producer standpoint. There's still tons of risk out there. Economy, COVID, geopolitical. North Korea shot off they say it was a Mach 10 ballistic missile the other day. There's a lot of potential black swans out there.
Yeah, a lot of crazy things happening out there for sure. So, Chip, if folks want to reach out to you, get more information about what it is you're doing at Blue Reef Agri Marketing, what's the best way to do that?
Best way is just call our office, and that number is 309-550-7213. Love to chat with you about what you're doing for your risk management and how we might be able to help zero in a plan and help you execute that.
Right on. Well, Chip, thanks for being on the podcast, man.
You bet. Thanks for having me on. Tighten your seatbelts. A couple hours here are going to get very interesting with these reports.
Yeah, I was trying to find the report last night, and oddly enough, I couldn't find it. So it's because it's out today. So it's good stuff there. So If you want to find me on Facebook, Twitter, and Instagram at MovingIronLLC.com. That's where you find the latest editions of the Moving Iron Podcast. Also go to MovingIronLLC.com for everything Moving Iron related. If you're looking for information about the Moving Iron Summit coming up here in Nashville, Tennessee, September 6th, 7th, and 8th, that will be up on the website here directly with all the information as far as rooms and those kind of stuff goes. So with that, I am Casey Seymour with Chip Nellinger. Let's move some iron, folks. Out. You want to have a meaningful competitive advantage to help sell more equipment. Whether you represent the sales, parts, or management department of an implement dealership, there's a surprising amount of complexity when it comes to tire, wheel, and track technology. Let Axon worry about that so you can get back to supporting your customers. Axon has leveraged years of experience to create a streamlined process that gives you a proven path to help today's grower and sell more equipment. The roots of their organization go back almost 100 years to the invention of the rubber tractor tire. Supporting agriculture is the number one driver of Axon, from product development through sales and service. To find more or become an Axon dealer, head over to axontire.com. This podcast is also brought to you by Valley Transportation. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. This podcast is also brought to you by Ag Direct. No matter how you buy your ag equipment, from a dealer, auction, or a private party, Ag Direct can help you finance it. You can even apply online at agdirect.com. Learn more about your financing options at agdirect.com.
Moving higher in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving higher.